Right, as we continue on in this chapter on investing, some of the stuff I've already mentioned, so we'll pick it up just a little bit. But I want to make sure I hit everything pretty adequately in this chapter. As we have more videos in this chapter. This chapter tends to attract a little more interest. Okay, so let's continue on page 171. And we've got some qualified plans, so we'll just briefly run through these. A qualified plan is a tax favored investment. You get some special tax treatment. And this is what we mean, okay? So there's a couple. One is an IRA, an individual retirement arrangement, or some just say an individual retirement account, but it's an IRA. All right. Now, when it comes to an IRA, you have to make money, you have to have earned income to be eligible. Now, it's a type of investment, and it's a good way to go. Now we're going to talk about the Roth IRA, but once again, an IRA is the tax treatment on virtually any type of investment. So let me explain that. I'm not a big fan of traditional IRAs, but there's a place for them, and it depends on uh, your income, where you work, if you have access to a 401k, etc. Okay, but let me just move on. So on the Roth IRA, which I said, and I told you, the money's going to grow tax free. So anything you put in there, it grows tax free. So after 5 years, you can make tax free penalty withdrawals if you're over 59 and a half. Now that's the key number for retirement. If it's 401k, you can't take money out of these things until you're 59 and a half. And if you do, you get penalized. They just don't want you to do that. Now, there are exceptions, and I don't want to spend a whole lot of time here. Obviously, because of a death or disability or a first time home purchase. But I don't really want to encourage you to dip into your retirement account to buy a home, and I really don't want to go there right now. But once again, it is there, and there's some exceptions and some rules and etc. All right. Now, on page 72, annuities. Don't get one. I'd stay away from these, but here they are. I got to talk about them. An annuity is a savings account sold by an insurance company designed to provide payments to the older at specified intervals, usually after retirement. Let's move on down through here. Fixed annuities have a low interest rate of around 5%. It's not what we're looking for. High fees, and it's a bad investment option. Variable annuities are mutual funds sheltered by the annuity, which allows the mutual fund to grow tax deferred. Don't buy an annuity. We're going to talk about insurance in the next chapter. When you buy insurance, you buy term life insurance. And when you invest, you avoid annuities. Let's stay away from insurance companies for the most part. They're great for life insurance, they're great for car insurance and home insurance, renter's insurance, but do not get an annuity. And I'll tell you why. You know who benefits when they sell you an annuity? Not you. The person who sells the annuity, the insurance agent. He's clicking his heels, going out celebrating that night at dinner with his wife that he had sold an annuity. Why? Because that's cash in his pocket or her pocket. Let's not go there. All right. So let's stay away from annuities. All right. Real estate. Now, no one in this class may ever get into real estate. But you know what? You're going to rent, one day buy a home, so you're going to get into real estate, and you may find out that you will eventually kind of like real estate. All right. Now, you should have lots of cash before using real estate as an investment. Okay, let's just back up, address why. Let's suppose you had 3 rental properties and you took out mortgages on all three. So you got to make mortgage payments on three properties. And now we have this economic crisis, and your renters lost their jobs, and they told you that they don't have money for rent. How you feeling? You got three mortgage payments. Now, think about this. What if you paid cash for those properties? Tell me, wouldn't you like to be able to tell those three renters, that's okay? You know, I don't want you to worry about your rent for the next 90 days. Now, you got to admit, that feels good. And you know what? You can do that because they're paid for. You paid for them. You don't have a mortgage payment. You own them free and clear. I mean, wouldn't it be nice to be generous like that? Sure it would. So just realize that if you when you borrow money, you don't know what's coming down the road. Nobody saw this coming 2 months ago. Uh, cash, cash is king. All right. Let's go down. Real estate is the least liquid consumer investment because you can't turn property over in a week for the most part. You may try to sell a piece of property for a year. That's not liquid. All right. Liquid means it's available right now. Right. All right. All right. You can read down through the rest of the page on 173. And once again, at the bottom of the page, the investment market is cyclical based on supply and demand. You're going to see some real estate prices go down in various areas of the country. And if you had cash, you could move in and buy something cheap because you have the money. All right. Anyway, so that's just something to think about because there's some real estate that's going to go on sale. All right. Now, some horrible investments on page 174. I've had people say, well, what do you think about gold? Not interested. All right. Just look at the return, 50-year track record, 4%. You want that? No. I don't know why we talk about that, but anyway, gold. Commodities. We're not going to get into the agriculture. We're not going to get into hogs. Look what happened. We've had, you can trade pigs. All right, it's a commodity. You can do oil. Look, how's that working out right now? And we've had some plants close in the Midwest where we're killing 20,000 hogs a day, just burying them. That's not good. So we're going to stay away from commodities. That's just not our thing. Once again, there might be somebody in the class 10 years from now. You go to college, you get into the finance stuff, and you get into all this, and you become an investor, But, for the average person, we're going to stay away from commodities. Day trading, we're not going to do that either. All right. And then the viaticals, we're not going to do that. We're not going to get into these things. All right. So that's all there. You can read about the stock market. And so I don't need to rehash through that. But I'll come back in the next video. It may be next week because it doesn't really in the next section. And then we'll talk about the employer benefits, etc., and finish up chapter 8.